everybody, this is Seth with Brookstone Financial. I know the recent market volatility over the first quarter and the second quarter of 2022 has a lot of investors and even a lot of our clients feeling a bit uneasy. Let me start by saying that historically speaking, when we're talking about midterm election years, typically, and this goes all the way back to 1950, typically we do see fairly substantial, some years worse than others, entry year pullbacks when it comes to market returns. Now, if we roll the clock forward 12 months from a midterm election year, what we've seen historically are often rallies. Now, some may say maybe this is the year that we break that cycle because we're facing $6 diesel, $5 gas, inflation that's through the roof. Now think about this for a moment. We've experienced a very similar market cycle back in the 80s. Now I want to talk about two different classifications or groups that we would suggest that our clients fall in one of the two. One would be they are in the accumulation phase of life. Accumulation phase of life means that you're not yet relying on your portfolio or your savings to supplement your retirement income. Whether you're actually retired or not, it's more a matter of are you drawing from your investments. Then there's the other segment of our client base, which we would consider to be in the distribution phase of life. Now, in the distribution phase of life, you are actually utilizing your portfolio to supplement things like pensions and Social Security. So let me talk about the difference between the two. For those of you that are still in accumulation, again, to be very clear, that means that you're not taking withdrawals from your portfolio to supplement your income. In the accumulation phase of life, when we see the market volatility like we have, the best thing that you can do in many cases is keep calm and carry on, literally do nothing. And if you do anything at all, one of the things that you might want to consider is doubling down on your contributions. Try to buy when things are on sale. Okay, so the recent market volatility and the downturn of the first and second quarter isn't as of much concern for those in the accumulation phase of life. Now, for those in the distribution phase of life, how do we manage the risks when we have money going out of a client's portfolio to supplement their retirement income? And here's the risk I'm talking about. If we have monthly distributions going out of a portfolio and the value of that portfolio is declining, ultimately what happens is you have to sell more shares of stock or mutual funds or ETFs to generate the same amount of income. Then, when we do see the market recovery, you don't have as many shares to participate in the upside. That's called sequence of returns risk. So how do we address sequence of returns risk? As most of you well know, we often use what's called a split bucket or a split ticket. Some of our clients' retirement income comes from money in the market. Another portion of their retirement income may come from tools like fixed annuities. Well, when the market's turning down, we may shift those withdrawals over to the fixed annuities, knowing that they haven't been impacted by the downturn in the market. So we're not backed into a corner to sell while prices are declining. So it's kind of a plan B, let's call it. Which what that does is it buys us time to allow the market-driven portion of their portfolio to fully recover over time. Now, another scenario is for those in distribution phase of life that are taking money from their portfolio to supplement their pensions and or Social Security is we're going to keep heavier cash allocations on hand. Typically, we'll hold back anywhere between 6 to 9 months of monthly distributions just to simply buy time to get to the other side of the recent market downturn. And I'm going to close by saying this. There's a lot of behavioral finance studies that would lead you to believe that during times like this, the best thing to do is simply keep calm and carry on. Now again, if you're feeling uneasy about the market or your portfolio balance, I would encourage you first and foremost to give us a call here at Brookstone Financial. It's 812-288-9000. Meet with your advisor, do a very thorough overview of your allocations and your trajectory as it relates to hitting your goals in the future. So I hope you all have a great weekend, and we look forward to seeing you soon here at Brookstone Financial.